following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 3rd. Terrific Thursday edition. Sorry about that. Couldn't remember what day it was, but it is the terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us. Not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 13 points. 22,030 is the number. The S&P is back 5 at 2472. NASDAQ 100 off 0.3%, down nearly 20 points. The Russell 2000 back 3. Semis are up 0.7%. That's off 8 points. 1075 is what it's printing at. You've got gold down $4. Silver off 11. Light sweet crude off 29 cents. She's printing out at 49.30. To the upside, dollar-wise, leading the charge at Stamps.com up $44. Tesla up 21. Teleflex up 11. Ubiquity Networks up 11. Take-Two Interactive up 9. Teledyne Technologies up 9. To the downside, it's Teva Pharmaceuticals. Woo! 86 buckaroonies to the downside. Down 15%, trading out at 474. Concho Resources, CXO, that's off $12 and change, nearly 10%. Amerisource Bergen, ABC, down over 10% or $9. Massimo Corp, down 845. Amazon is off $8 as well. Of course, I want to take a look at what you want to look at, and so therefore, let's go to our first request to Mundo. This came in yesterday after the show. This is from Jeff, and Jeff says, "Hi, Steve," and I say, "Hi, Jeff. When you have an opportunity, would you give me your thoughts on when to take some profit in ticker symbol here is FOCPX. So let's go take a look at this. This is a Fidelity Mutual Fund is what it looks like to me out here when it looks like this. So let me change this to, well, let me finish reading the question here. Half my position was entered on May 19th at 100, the other half on July 13th at 104. I do want to hold a portion of this for the long term, but would also like to lock in some profit at some point. Thanks so much. Okay, so you just got into this in May and July, and you're asking about where to take profits, and you're trying to hold some of this for the long term. So it's hard for my mind to totally completely comprehend that, Jeff. I mean, if you're looking for long term, I'm going to just switch to the monthly chart out here. So that's what I need to do first. And with regard to this mutual fund, I need to know what it would track. So that's another thing. I didn't exactly do my homework on this with regard to seeing what it was, but my guess is by looking at this chart, it looks like just by looking at the price action of the, well, that's pretty clear. Looking at the price action of this chart, it almost seems like I could put the NASDAQ 100 up on it, and we would be pretty similar. Anyways, the chart pattern is the same, regardless of whether it's the NDX 100 or not. It looks like it's something tech related, and so long term. Let me just give you the long term view of this specific instrument, and that would be by simply taking a look at the consolidation pattern that it broke out of. So longer term out here, this is the very simple interpretation and reading. And both because of the highs that were put in back in 2002, I'm sorry, the lows in 2002 as well as the lows in 2008. And then you had that nice little consolidation as it made its 100% move by getting back to the 2000 highs. It was doing that all during the time period of 2014, really up until 2017, January of this year when it broke out of this. So long term, okay, I can give you the long-term price projection on this, and that would be until price gets back inside the consolidation pattern. And not all consolidation patterns work, but to answer your question, chart-wise, 148, this is at 106 as you speak right now. Where you get out of this thing short-term, man, I don't know. Really, that one's a tough call. I can't really use market profiles on this instrument out here to assist you. There's nothing wrong. This continues to make new highs, so that should not scare anybody. Basically, make new highs out there, right? New highs mean what? Means it's bullish. If we take a look at a trend line out here, I got to really switch back, I think, to the, weekly probably would work. Yeah, I mean, you've got a nice trend line that you could use that as one of your tools. Just draw it off of the February 8th lows out here and wait until, so price coming back, and the trend is your friend, and the trend on this is to the upside, no question about that. There would be no suggestion that your next buy point would be a test of the trend line. Now, I don't know where that would be, but you can draw that trend line on your chart out here. So it's at 106 right now, and you're in at 100 and 104. So if you want to take some profits and take them now, I guess. I don't know. On a short-term basis, I'm not really sure what to give you as they don't really have a set of tools out here that would assist you with that in this vehicle. But it does look like this is emulating. Okay, this is great. So Phil says invest primarily in dynamic growth companies listed on the NASDAQ Stock Exchange. Okay. And Phil, you and I, we knew that, right? As soon as we saw this chart, as soon as I was able to pull it back into the 2000 time frame. In fact, if we just switch over, let me put this on a monthly basis. You will probably think that I haven't actually even changed the symbol here. And now if we just simply, I'll just put up the QQQ, and that's why it was pretty easy to say, well, okay, this must be tracking the NASDAQ 100, the composite as much as it can, things of that sort, because the pattern looks so similar out here. So I don't know, maybe, Jeff, you try to time this with regard to for short-term profits with regard to that. Or go take a look at the top 10 holdings. Phil probably can tell me because he's looked it up here. But I would imagine the top 10 holdings are going to represent a significant, even though there's 290 issues in this, it looks like, or something along those lines. The top 10 probably represents 25, 35%. And maybe just look at those top 10 holdings inside of FOC PX. Jeff, hope that helps you out. This is Steve Rhodes with TFNN. We'll be right back to answer some more questions. Questions rolling in about, hey, Steve-O, you haven't looked at any of the seasonality stuff. Could you review that for us? We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 6, S&P is off 6. And so, Jeff, to finish off your question for you, because I said, maybe you take a look at the Qs or the NDX 100 as a way to manage that trade, or take a look at the top 10 issues that are in there, which are Apple, Google, Amazon, Tesla, Activision, Amgen, Facebook, NVIDIA. In the Qs, so the Qs are kind of an interesting vehicle. Yesterday's candle, and I'm sure that none of you overlooked it, but yesterday's candle, because of the decline we had on the 27th, yesterday's candle inside the QQQ series ETF was a hammer candle. Now, I don't think that any of the other ETFs formed hammer candles, just the Qs, which is kind of cool because of the strength that is inside it. And the hammer candle indicates to both you and I that the market, or buyers, are trying to hammer out a bottom, buyers and sellers trying to hammer out a bottom. So, Jeff, what we can say here is if you were to see a close below yesterday's low in the Qs, you should anticipate lower price. Because if you're long, you're wrong, as the rhyme goes, with regard to closing below the hammer candle. Now, where would this be a price target? I would have to say in the 139 area. That's where you see Stevie's red dashed line on my chart out here, and that would be kind of your target. You could also take a look at an A to B equals CD to the downside. That could form out here. It's kind of an unusual one, I have to admit, but 140.86, 138.86, that would become the next Gartley buy type pattern. So I don't know whether, again, you're trying to take some profits on an instrument, and maybe just pay attention to the Qs out here. It does indicate it's trying to form a bottom. And so maybe just to take your question, because Jamie wrote in, and Jamie asked if I could review with everybody what's the market doing in relationship to some of the cycle pattern work that both you and I do. So let me pull up this stuff here, and which I kind of keep handy. And he was referring to, as you already know, he was referring to years ending in 7. You and I have covered that. We won't do it ad nauseum, but we will cover it. He was talking about just simply the seasonal cycle, I assume, as well, maybe the presidential cycle, and then any other cycles that Steve-O has up his sleeves. Now, when we're going to be taking a look at this for the most part, well, I'll tell you when we get to the long-term aspect of it. So let me pull this chart up. which is really from this slide right here. So you hear a lot of talk on all over the place these days. How can you not? Because it is 2017. Yes, where are we in the sake cycle? We're just a few hours away from that next sake cycle starting, Jaster. Of course, we got to get it. Then we got to get it in the refrigerator, get it nice and cold. And then, I don't know, 6:30, 7 o'clock would be the good time to go along sake. But in this chart here, what we're taking a look at is the last 12 decades, 120 years worth of data inside of the Dow. So that means I really only have 12 sample sizes, right? You've got to wait every decade. Keep your remember the word decade out there, because I'll bring something in. I haven't actually showed this to anyone that I know of with inside the TFNN family. It's just something that I use off to the side that helps, always reminds me. Well, anyway, we'll get there. Let's take a look at this. So, Jamie, with regard to years ending in 7, with regard to the Dow, when we get to this top right here, which is in July. This is an approximate time period on this is right around July 20th. All right, so around July 20th, typically in years ending in 7 is when you see a top type form. Where this is specifically for the Dow. It's August 3rd, August 2nd. So it's not exactly like that is working. I mean, you can give this a few days. You can give it a few weeks out here. So if we give it a few weeks, we're in that time cycle right now. The next time cycle is right out here, which is in August. So in August is really when things would start to get cooking, potentially start to get cooking to the downside. But is that really, other than shorter term, is that really where you'd want to go ahead and sell the market in that year's ending in 7? And the answer is, if you're going to use the average of the last 12 data points out here, the answer would be no. You would wait until October. So in this case here, that next data point where things really start rocking and rolling, but of course, remember, at that stage, so that's October the 10th, give or take. And then the market moves lower into the November time frame. So that's what years ending in 7. Do I think that how often do they work, by the way, if you take a look at the last 12 cycles, last 12 decades? No better than a coin flip. No better than a coin flip. Out of 12, we're at 5 and 7. It's like 6 and 6, right? It's no better than a coin flip with regard to it identifying a significant market high out there. I just think it's a lot of malarkey for the most part. Coin flip. You're not going to make decisions based on a coin flip, are you? So, okay, you got 87 and you got 2007 out there. I know we've got some years, certainly. You got a coin flip. In the last 120 years, 5 out of 7 times it didn't matter. Or 7 out of 5 times, or 7 out of 12 times. I'm sorry, 5 out of 12. It did. So that's one cycle that you can take a look at. You've got the forget about the heading on here. Whoops, didn't mean to do that. Forget about the heading on this slide. In fact, because that was taken from something else. So not in any event, the annual seasonal cycle. All right, suggests that the Dow, because this is all followed by the Dow, this is only the last 85 years worth of data, suggests July 21st. So we had July 21st, we had a July date in the years ending in 7, only looking at just those years ending in 7s out there. And we haven't seen this. Now, this suggests they move to the downside. Now, look, I can absolutely understand, and I'm not ignorant. I mean, maybe a little bit, but I'm not ignorant of these charts. I recognize what's out here. I recognize that the market could at any point in time start to move lower, and these cycles could be in effect. We could also really have these cycles are sort of in effect in just a sideways movement for several months out there. I mean, anything can happen, can it not? But what we know about at this stage of the game is that the move lower that typically begins in the 3rd week of July hasn't begun. That is for sure. So is this the cycle that's in effect right now? Right now, the answer's got to be no, it's not. I don't see it just yet. Now, we also happen to have the first term of a new president. It doesn't matter whether it's a Democrat, a Republican, whether it doesn't matter what it is out there. Yeah, and I can call it a what and it is. And in those cases, the market actually makes the Dow itself, makes a bottom around July 7th. Now, interestingly enough, July 5th was a Gartley buy pattern inside of the NDX 100. So I would be more inclined right now to say this is the actual pattern that has precedent at this stage here, which would then suggest that the market would move higher into August, because we had a nice pattern. That pattern, by the way, here, let me do this. We'll come back to it. That pattern, by the way, just in case. Now, again, I was looking at the Dow, absolutely, and the Dow has not made any kind of bottoming pattern. It just keeps moving higher. And if I look for that bottoming pattern, I know it's got to be somewhere, here it is, inside the NASDAQ 100 here, inside the NQ. Well, I guess I just have to delete this one. That's the A to B equals C ETF, so let me do that. There we go. So here's your A to B equals CD. So that occurred out here on July the 5th. July the 5th. When we come back, folks, we'll take a look at a couple other things. We'll take a look at something I've not shared with you before, but it says we don't see a market top at all this year. Markets are headed higher. Steve Rhodes, right?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let me go ahead and finish this up. Just try to answer Jamie's question. And I'm kind of switching. We're kind of moving over towards. So here's the cycles out here, and I mentioned that the best cycle that fits the picture right now is the first year of any presidential cycle out there, which forms a bottom July 7th. We had a nice bottom pattern that formed inside the NASDAQ 100. That came in on July 5th. Until proven otherwise, that's a cycle that I would say would be more underlying than years ending in 7 or even the annual seasonal cycle. And then if that's the case, says, hey, August would be a time period to be paying attention to. Now, all of that fits with the larger picture here. This is not as of today, by the way, but we're not too far away from it, which suggests that on the longer term, and this is what we actually looked at with Jeff, right, when we took a look at his instrument. This is the NASDAQ 100. This is the long-term consolidation pattern. We know there's a break in consolidation. This is where the 8,500 figure comes into. I'm not going to go ahead. Well, I am going to go ahead and give you the time frame as to when this would come in. I remember the first time that I shared this with Tom, his question was, well, when is that going to happen by? And that's a valid question, because that's like, is it going to happen in my lifetime? Is it going to happen in my kid's lifetime? That kind of a thing out here. So you've got a really nice consolidation break inside of the NDX 100. That was a monthly chart right here. And what that fits into, if you take a look at this is a chart. This is what I have not shown anyone. I'm not going to tell you what instrument I'm correlating what the correlation is on the bottom of the screen. Some of you may be able to figure it out, so I didn't totally erase everything out here. And don't pay so much attention to the scale, so to speak. Look at the years. There's a top portion of the chart here, monthly chart for the Dow, and the bottom. This again becomes a directional type correlation out here, and it works. Does not work to the day, does not work to the month, but it tells you what to expect and what to anticipate out here. And if we take a look at this chart here, shows this nice spike in the middle of 2000. Not too far away from, if you take a look at the Dow, when we actually formed a nice high out here. And then, in this case here, take a look at the next significant bottom inside the market, the March 09. Take a look at actually the high in 2007. This one was, and we did have one high, right, inside of the Dow in July of 2007. And then there was one more push higher to create that bear market pattern, right, which is price movement higher, doing less relative energy, right? We know what's associated with a bear market. And that really correlated to this chart out here. And if you take a look at this chart with regard to where we're at right now, directionally speaking, it is correlating really well. Now, I mentioned that we were taking a look at years ending in 7, and that meant we were looking at 10-year periods, in other words, decades, and, Z, and this, folks, is shifted forward by 10 years. Now, take a look at this. So some of you might say to yourself, okay, well, then where are things headed to? Well, now if we take a look at this chart, because I can't use my normal charting system and push it out into the future, unfortunately, but I can, and I do have a graph of all this data out here. And this says that if that's the real cycle that is in place out here, again, more from a directional standpoint, although, I'd certainly like to see the actual move to the upside out here. This actually takes us, folks, into 2018. In fact, it takes us into, we'll call the middle of 2018, but we're not going to use this from like an exact time frame out here. But that pattern works really well, probably better than any of the seasonal type cycles and so forth. So you're looking at June of 2018. Now, then we'll be talking about, or what looks like, a fairly significant move to the downside in a relatively short order. So, Jamie, I hope that assists you, and we'll go back to some of the other kind of daily calls out here. Now, interestingly enough, we just got an email from Alex. Those of you that are in the den, you know Alex. He is our resident alpinist. Is that how you refer to it? An alpinist? So, am I pronouncing it correctly? He is our, we'll just call it what it is, mountain climber. So apparently he's still out there climbing the, not hills, and but he does say he's still alive. He says to say hello to all the tigers. Happy summer to all the tigers. And Alex is long XLE. and short the OIH out here. So, and he's looking at this for like a 1 to 2 month trade out here. Now, one of the things, Alex, that I will put up on the screen out here, we'll take it back to about as far as I can take it back to, which is in June of 2016. The top portion of this chart, Alex, and I don't know if you're actually watching or not, but the top portion of this chart is the energy sector, the XLE, and the bottom portion of the chart is the oil, is light sweet crude. The continuous contract for light sweet crude. Now, the bottom panel is the correlation. And again, in this stage here, I'm just using a 20-day average. So in essence, a month worth of data. And you say you want to take a look at this as a 1 to 2 month trade out here. And what you'll see is you'll see these red lines. Most of them are above zero. And if it's above zero, it says it's got a positive correlation. In other words, the direction of the XLE is lining up with the direction of light sweet crude. You see a couple inversions out here, a couple periods, but for the most part, and I could use this on a shorter term time frame as well. Let's do that for you. Let's just throw this up here with a 2-week or a 10-day correlation out here. And you'll see even in a 10-day correlation, for the most part, the majority, 90+% of the time, probably 95% of the time, they are directly correlated. So if we go take a look at the XLE for you, the one nice thing that we like about the XLE is the hammer candle that it formed at the bottom of a pattern. So let me switch over to that chart out here. Let's go take a look at that. We'll pull up the XLE, because that's how you like to see a chart form when price is moving lower or moving higher. You like to see it do it with a nice pattern. Oh, that's the XLF. That was not the instrument that Alex asked us about. He asked us about energy XLE. So you can see this price was moving lower. This is back in the July timeframe, probably right around July 4th. Nice little hammer candle. Tells you the market's trying to hammer out a bottom out here. And price starts moving higher. Now, that's a beautiful thing. Not much higher. You know, gets to the fifth leg out there. The biggest problem right now today, Alex, is that what you have inside the XLE is it bounced to where it was supposed to bounce to. And what I mean by that is, as its price oscillator, the difference between two exponential moving averages, those being 19 and 39, once it approaches zero, that's where you really got to keep your eye on the instrument. Now, typically what will happen, what you like to see is what you saw happen yesterday. What happened yesterday was price came back, tested Stevie's red line, that's that oscillator on change line, tested it and rejected it. That's what you like to see. That then said, okay, price should continue higher. You would then have a rising price oscillator above zero, and that would be at least short-term bullish, maybe even longer than that. You see, the price oscillator has been below zero since February 2nd. Now, when we're taking a look at the price oscillator, it's not intended to be able to identify a top or a bottom out here. But when it's at that zero line, it is really important to assist us with the momentum of what's going on. And you're already inside of the XLE. And today, the XLE, Alex, is trading below Stevie's red line, 65.76. You really want to see that close above that today. Otherwise, it says you've got more retracement in store for you. We'll go take a look at the OIH when we get back to this
one. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, we got a caller on the line, Kay Rico in Pompano Beach. Kay Rico, how you doing, Steve-O?
Oh, Steve, good. How are you?
Good. Nice to hear your voice. Are you back in town for a while?
Yeah, I've been actually back and forth to Michigan, being with my mom and helping her out and giving my brother some breaks from all the work he does to help her out all the time.
Ah, that's great. That's great.
Yeah. My mother's 96 almost, a few months away from that number.
Oh, that's a beautiful. Now, do you have a big party planned for her 90? Are you taking her to a Tiger game?
No, that would kill her.
That would kill her. Huh? Okay, all right. Well, we don't want to do that. We don't want to do that.
No, but in any case, moving along.
Yeah. So you want to take a look at DTE Energy. Tell us what you're doing, how I can help you.
It's been in the family for 50 years.
Okay.
So I'm just curious, when is this beautiful ride going to stop?
Wow. Take a look at this. Well, hey, tell your mom, nice trade.
I know.
So 50 years ago, so I don't know, what's 50 years ago? I don't even have a price that goes back. I've got it from 1968. Yeah. Hey, that was a good year, 1968. Yeah. Okay, in the 20s, as far as Tigers go. Look, at this stage here, and when I take a look at DTE on a daily basis, what it's doing right now, it's trying to form an A to B equals CD to the upside. What it's doing, K Rico, it's trying to take out the July 24th, July 21st area. Now, the volume up there is much higher than where it's trading at today. But on just simply a daily cycle type time frame out here, what you saw take place yesterday is exactly what Alex wants to see take place today in the XLE, the energy sector. In other words, the price oscillator in the bottom portion of my screen reached zero. Yesterday was a test, a rejection of that level. As long as this stays above 106.97 on a daily basis, it's going to make its next move to the highs out there. From a long-term standpoint, if I just turn this to a monthly time frame, I mean, are you guys actually looking at ever selling this?
No, it's the beauty of it. It's a family affair.
Yeah, yeah. Even on the monthly chart out here, looks like it. I don't see anything that is going to stop this from continuing to move higher. So, buy your mom something special.
Yeah, yes. Detroit Edison is just doing some fantastic things with the community and some fantastic things with new future projects they're working on, and Detroit is growing. Even though we're far away from it now, it's a happening place.
Yeah, which is great. It's actually a terrific metaphor for just life, right? Just simply the cycles of life, just the cycles of the market. You get to the 2008 doldrums, and you think, when is it going to end? Nothing lasts forever, so to speak. So, and I've heard a lot of great things about Detroit coming back too. So the stock chart looks really good. I'm not going to be the one. I'm not going to be the one to get you guys out of it.
Yeah, no, I hear you. So I just wanted to mention one other thing, and that is that that project that I've been working on, that I've been speaking about sending to you. The package is all wrapped up. The book is at the point now of I've stopped making all my own critiques and criticisms and beating myself up over the book. I'd like to just send it out and get some constructive criticism back.
That sounds great. So send me an email, or I'll send you an email later on today, and we'll just coordinate that. And that is, you're talking, folks. You're talking to author K. Rico. Oh, you're going to send it to me by internet.
I was just going to send you an attachment, a simple attachment.
Perfect. That's perfect.
Yeah.
Okay, that'll be perfect.
I think you'll find it quite bizarre, this book.
Oh, that's great. Hey, I got a question for you in the den. See if K. Rico has any earthquake volcanoes coming up.
Yes, actually, it's no joke.
Yeah, that's why I was asked.
No joke.
So what are you seeing? What are you feeling?
Okay. I mean, as strange as it is, that is my hobby. And what's going on right now is we are in the deep throes of a great deal of present activity in Oklahoma, and we also have serious volcano eruptions that are along the fire lines that could trigger an actual very devastating volcano out of Yellowstone National Park.
Really?
And yeah. Yellowstone National Park is starting to have small activities that are not good. But imagine Mount St. Helen, what that volcano did.
True.
The reality of Yellowstone is 100 times magnified.
Wow.
Which would create a ash plume to cover half the United States. Now, I've been in a few earthquakes in my time, but the volcanoes actually that I've been in Costa Rica scare me more than the earthquakes. So
and so whatever it is that you track and see, you would also see if there was something that would suggest the opposite. In other words, the pattern's gone away and it's alleviating the problem. Is it because you're saying something that's more intense now than you've seen in a while? It sounds like.
Yeah. The biggest problem is that the intensity of the grid mapping that I use to kind of make my own charting, and I use other scientific charts that give me much great information that I can't even expand on. But the point right now, from what I put together with my triangles and my simple charts, that we are in the beginning pattern of a new rise of volcanoes and earthquakes. So we'll see what happens.
So the Oklahoma piece of it, does that have anything to do with fracking or something else? Just okay.
Yeah.
But
people are in denial that the fracking does not cause any harm, and who am I to say they're wrong? But then again, the scientific volcano and earthquake charts and constant, mapping. Mm-hmm. Why would Oklahoma be the center of the United States, of earthquake activity?
Yeah, no, I get it. Well, look, hey, it's thanks for sharing that with us and updating everyone. And I'll look forward to getting your email. Most certainly. Good to hear your voice. Tell your mom that the Tigers and Tigresses wish her a happy birthday, and don't sell Detroit Edison.
Amen. Thanks. Nice talking to you, and I look forward to your time to read the book and feedback in the future.
That sounds great, folks. That was a longtime listener of ours, K. Rico, of Costa Rica and Pompano Beach. So I don't think I have. Was there another question? There might have been a question that I wanted to. Oh, the OIH, that's what it was. So it was the OIH that Alex was also interested in. And so we're going to take a look at that when we get back from this break. I'll check out the email, see if there are any other requests. We'll get to all of those. Dow's up 4, S&P is off 5. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So let's go finish this off by taking a look at the OIH for Alex, our mountain climber, and he's short the OIH. That's the VanEck Vectors Oil Services ETF out here, and this is the daily chart that we're looking at. What we like about this, Alex, I like this chart being short this chart versus right now today being long the XL. You really need to see how it closes out, though, because if you get a second test of Stevie's red line and rejection, that is a positive thing. And we could just see some wobbling here. You're kind of at that go or no-go inside the XLE. You're in the no-go to the upside inside of the OIH in that you've got price right now trading below the daily bottom of the box out here. Now, whether or not it's going to be able to take out these lows here that were formed back on July 7th, where there were 6 million shares, and you're coming down today with 4 million shares. So mathematically, in fact, yesterday was a test, 4.1 million shares of that swing. That had 6. So that was a test and rejection. But it looks like that wasn't good enough out there. On a weekly basis, you've also got support at about 2409 on its TAS market profiles. Because you're taking a look at this as more of a intermediate term time frame trade, as we can speak right now, 1:55 in the afternoon, and this is August the 3rd, that as long as price stays below my intermediate term red line, which looks like is at 25.04, then staying short is the right call. We can see on a weekly basis. Okay, so that close is on a weekly basis, not a daily basis. We can see that we haven't seen price above Stevie's red line in quite some time. In fact, it takes you all the way until, looks like the first time we got below was February 9th, 2017. So I would use those as my parameters because if you do see a close on a weekly basis above Stevie's red line out there, that would suggest, well, one, a move to 26.87 and potentially a change in trend. And, you know, that was really established where this is the first time, well, it's first time in several months. This, when I say first time, I'm talking about the week that ended July, looks like 15th, where we can see some type of bottom that is trying to be formed. You had a nice weekly bullish engulfing candle. So there's support, not too much lower. You'd like to be able to bust that out, and if you can't, just watch the upside right around that 25.04 level. So, folks, I don't see any other requests out here. Only a couple of minutes to go, if that. If we take a look at, so you've got gold back $3. And the yen down quite a bit. The yen is now going to, or should, make a run for the low. This is a daily chart we're looking at. The swing point from June 14th, right around 108.83 out there. You're trading at 110.19. Of course, this is a 15-minute delay on this chart out here, but this should eventually bode well. It is boding well for gold. I like what gold did last night. Gold gave us the type of support signal that we wanted to. It's very similar to what we looked at in the XLE. I won't show you the chart, but very similar to what we did in the XLE. So you want to see gold continue to bounce from here. I don't care if it's back $4, $5, $6, something like that. But we did get a nice bullish message earlier this morning. The spike lower was where it was supposed to go in order to generate that message. So, folks, hey, come on over to the homepage of TFNN.com, the homepage, the home Facebook page, and guess where the S&P 500 is closing today. And you just have to do it by 3:30. So for all of you Facebookers, there's no reason to not throw a figure out there like 24.69 as one example. Others have got 24.73. So who's going to be right, Maria or Steve's WAG? And you know what that WAG stands for. So stay tuned, folks. David White's up next. It's Terrific Thursday. That means you've got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6. We'll see you on Fabulous Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching TigerTV.